Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to talk about the advantages of using ORATS data and APIs. Matt, do you want to share a screen and get us started by going over our positions?
Absolutely. All right. So we had on we call it a short risk reversal with stock. So that's a caller. So that short risk reversal is long put, long call, or short call. They used to call risk reversals because people used to just say, "Oh, I'm just going to do the puts and calls instead of the stock." So I think that's on the floor. That's how I remembered it at least. And then so we had that one. We did a Trump risk reversal that was hard to borrow. Short risk reversal, another one. Hoping that it would be harder and harder to borrow, which it didn't end up being. So we lost a little bit there, and I'll show you how to calculate how much we lost. And then the ABGO, we did the flapper, my favorite new strategy where I coined the term because it looks like actually I'll turn on my drawing tool. It looks like goes down, up, down. It's like an iron condor, but instead of it going like this, it flaps up. So I call it the flapper. So we did a flapper, which gets you long units. So we sell, kind of pretty far out of the money, but we get units, meaning these are kind of a cheap way to get units. And as a matter of fact, it's done at a credit. So what that means is now we could sell something against it, and it doesn't cost as much on margin. So we did that. So we'll see how we're doing. So ABGO, the short strangle, we sold it at $1.19. It's now down to 28 cents. That's good. And the flapper stayed about where it was. So you could almost put on, well, maybe next week we'll put on a new trade there. But we're up like $190 on ABGO. On NVIDIA, we're up $1,000. So that's good. And then Trump, we lost a little bit. So again, so we did this risk reversal. So if you price it out at the price of the stock, so 1726, the 18s are worth 74 cents. So we probably lost 20 cents on that one. So that's the 20 cents was the additional put call parity that we paid over what we should have, hoping that it would expand even from there and be even harder to borrow, which it ended up not being. So those are the trades, Tyler. Any questions on those? There's 3 good trades there.
Yeah, quite a few of them going on, but they're doing well. So.
Yeah. So today I wanted to talk about just comparing ORATS API and data, really just to other data, what you need to do to have edge. So, my background is I started on the floor of the SIBO in the 90s and kind of quickly started, a lot of people did paper calculations back then. So I was pretty adept at least Excel and macros and such. So I wrote a bunch of analysis and then hired programmers and PhDs to come in and help me with the analysis. So one of the first things that we did was we wanted to describe the option surface into parameters that we could then trade from. So what that means is, and I'll go to an options chain here, Tyler. So an options chain is basically all of the options, and we kind of show it uniquely. We break it down like each one of these is an expiration. So September expiration has these dots, and the reason there aren't as many dots is because what happens is when you get closer to expiration, like this is just one day, there aren't that many that actually have deltas, or that are not zero. So there's not as many options that have some extrinsic premium. So that's why there are fewer there. And then what we do, so we put all these dots. First of all, we line up the puts and calls. So the puts are purple, the calls are in cayenne. So you can see that they're almost overlaying, except for on the extreme wings when they diverge a little bit. And so the first thing that we do is to line up the calls and put implied volatilities. And the way you do that is if you have a good interest rate, good dividend rate, or what we call, and then whatever's left is we call the residual rate, and we actually build that into our calculations. So we work hard to line those up. So if you line up all these dots, then it's a matter of getting a good way to draw a line, and we use graphic designers, and there are a bunch of mathematical formulas that are beyond the scope of what I know or this call, but to help draw that line. And so I spent years on this. Like, this is the hardest one, because what you want to get are these very accurate volatilities, these very accurate at the money volatilities. And so that's what you end up getting if you draw these lines well. And so we spent a lot of time on that, and then and draw that line. And once you draw that line, then you could start to talk about, well, how much curvature is in there, and then you solve for that curvature. And then once you solve for that curvature, then you just have slope left, a straight line you should have. And then that line, we kind of say every 10 deltas, how much higher is the volatility, and we call that the slope. So this is about a typical average long-term slope over the last year is about 4%. So like I said, so if it's 100 volatility at the 50 delta, it'll be a 104 at the 60 delta call. So far so good, Tyler?
Yeah, I think you explained it beautifully. And really what we tried to do, right, is summarize all this options information, right? And with the goal being, when you have summarized indicators, you can compare them historically, and you can make forecasts of those indicators, and you can also compare them to related equities. And then that kind of opens up a whole new door of analyzing options and gaining an edge.
Right. So that gives you like a theoretical value, right? So when you forecast all those, parameters, right? Slope, we call it derivative, and we forecast historical volatility going forward, and then we forecast extreme long-term implied volatility. So we get a parameterized skew, and then we could go. I think the Trade Builder does a good job of this, showing how we value the skew. So in XSP, for example, there's red down below, which means the puts are valued higher than the calls. So that slope is actually pretty steep for XSP, and the calls are a little bit cheaper. I'll just try to type in some other ones quickly to see if there's any other colors than red out there. And yeah, so there's some green. So in Apple, we think that the slope is pretty slight. So we might say R.
Yeah, it looks at that heat map looking thing. It looks at both short and long-term
Right.
slope and volatility.
Right. So slope is underneath the forecast is basically what that means, and it's down from kind of current highs in Apple, for example. So that's so one of the things that sets ORATs apart, and hopefully what people are doing are these theoretical values. So once you get a parameterized skew, and what that means is, of course, like a short-term and a long-term implied volatility forecast, and then a skew forecast, and then you can start to make your parameters. And then again, if you go back to the options chain, you could see two theoretical values right off the bat, right? So we go down to about at the money. So those theoretical values are our forecast vol and the smooth vol. And the smooth vol is, from above. When we drew that line through the dots, that's a smooth vol. And so what the smooth vol is like 95 to 99%. Our theoretical value is within the bid-ask spread. So you could see on these 230 calls out in October, the market is 560 at 570, midpoint is 565. Our theoretical value is 566. So very close. This is 1 cent off too. So, and these are parameters. So this is, like I said, very difficult to do, and we do a really good job of it. It's not that meaningful, or I should say it's not as meaningful for really tight markets. When you start getting markets no bid at $3, you have no idea. Then that smooth can give you a good idea of what you should be paying for, and how you should be hedging, or to tell if you if you have a good implied volatility at the strike, it makes all your Greeks a lot better. Delta, Vega, Theta, Gamma, all those Greeks are better if you have a good, what we like to call a smooth value. Because what you'll see out there is some people just take the bid-ask implied volatility, right? And and it might be like, if you're out here, it's like, what do you do? It's no bid. So the bid implied volatility, ask implied volatility, mid volatility. It's no bid at 63. So if you were using the mid, often they just go towards the only one that they publish. But it really should be, we kind of flatten it out at 27. And then you're able to actually make a theoretical value and a delta. But if you were to use 63, that might have a 2 cent or a 3 cent theoretical value, which would be wrong, and you'd get a bad delta as well. Does that make sense, Tyler?
Yeah, so that's one of the use cases for the smooth percent. And I want to move on to some more of the other theoretical values and other advantages, because the time goes by quick. But I think, there's just so many. And, now we can move on to the forecast edge and the distribution edge, right, and how those are used in the option scanner to find trades. Obviously, this is a great use case of the S%.
Yeah. So, and like we saw before, our forecast is slightly positive for Apple, just based on what we saw on the trade builder. And then, and what you can do is clear out these and just put F. So these are kind of short-term. F. Why did I put F? Let's do Apple. So we'll probably be buying. These are long call spreads and short call spreads and all that. So what we're going to find is that a long call spread, short put spread, kind of the mirror images of one another, are going to be what we're going to like more for this particular stock. So what we could do, Tyler, put on a trade here. So anyway, let's just take a look at it. So we'll talk about D percentage a little bit later, but F percentage is forecast percent, and S percent is that smooth percent. So as a matter of fact, when you start seeing it over 1, I will filter these down between 2, but if you're seeing it over 1, sometimes, actually, let's just take it. Let me erase this and then we'll take a look. So here's 1.4 in October 20. Let's go take a look at this in the chain. So a cool thing is, in the option scanner, you click on it, it sets up the trade. we see there's some edge, and we go over to the options chain, and we could see where the edge is coming from. So the SMV here is 132. So this is a case where we think we're kind of outside. So we think it's worth less. So we would sell this one, and this one's kind of in the middle. So we would buy that one. And so that's giving us some smooth edge. Now, what happens is market makers know that usually. And let's just take a peek at it here. And if you click on it, you can see here. So you can see that, our smooth edge, we draw the smooth edge through it. You can see that one's under and one's on. So often market makers are doing the same thing. So you won't get filled if it's got a ton of edge, but this we might get filled on. So I'd be inclined to look at this trade, Tyler. So let's go back to the option scanner. So that's a smooth edge. That's the forecast edge, and the distribution edge is a little different. So distribution edge is the third type of edge that ORATS has. And basically how we do that is we put all these actual stock moves for the number of days into a bucket and then make a distribution out of that. And we adjust it a little bit for a high implied, low implied. We'll adjust those more to the middle. And then we'll make this bucket, and an expected return is multiplying the percentage by what the value is here. So this is red. So you multiply this red loss of $87, which is the premium that you're paying, times, I think this says 11%, 0.7%. So then you would add up all the nodes, and that's an expected value. And that expected value is 85 cents, which is incredibly close to what it is. It's 84 cents in the market right now. And our forecast edge, as we talked about, we're kind of projecting higher volatility onto Apple. So we have 5 cents of edge there. So those are the three types of edges.
Right.
Tyler,
yeah,
and again, these are just one of many things that give us a lot of differentiation and edge in the market. But those are important theoretical values, Tyler.
Yeah, it's a great way to trade. I mean, ORATS is built for traders. It's a great way to scan for options and to see, where ORATS is valuing it versus where perhaps you're valuing it or where the market's valuing it at. Let's talk, Matt, a little bit about some more of the other advantages. I want to talk specifically the Outlook tab, and then sort of in that same note, related equities. So best ETFs,
right,
and sort of the _C symbols that ORATS has, unique to ORATS, that uses the same data that we've been talking about in sort of a different way. And instead of scanning for options, this is a great way to scan for stocks. So it's full circle.
Yeah. So what you're talking about is once you get a very good measurement, then you could do a lot of things with it. One of the things that you could do with it is, well, now that we have a good, what we call constant maturity implied volatility. So usually at the 30-day, 1 month implied volatility, how does that compare to all of the components in the XLK, which is the most appropriate ETF of the spider ETFs? And to that end, it's on the low end. So this is another reason we think we think that implied volatility is a little bit cheap right now in Apple. So that's one of the reasons is that Apple is cheap compared to where you could just kind of look. It looks like it's about 80% usually, and then recently it's been lower, the volatility in Apple versus its brothers in arms in the technology space.
Yeah, it's a really unique comparison that I don't think anybody else does this. At least does it to this.
Standard. I've never seen it. I think it's a great way to. I think internally some trading firms do it, but I've never seen anyone offer it. Same thing with the slope, Tyler. So again, when we get this very accurate way of calculating slope, then we can compare slope to all of its XLK brethren. My office mate wants to come in the door. She hasn't quite learned how to open the door yet.
I think what ORAT's doing with all these indicators, it's a steep learning curve, right? Like if you're coming in as a retail trader and you're just starting to learn about options and seeing all these indicators and all this talk about volatility surface and slope and all these the lingo, right? It can be overwhelming, but what you're going to find is that it's almost necessary to use this data in today's market environment, because as a retail investor, you're competing against algorithmic trading and robots and hedge funds, doing all these trades. You're competing against them. So you want to have this institutional quality data delivered to you in a quick and easy way. And that's what ORATS offers.
Yeah. And, we have a ton of data, like historically, all the way back to 2007. So you could backtest on it, So this is one of the reasons that we built a backtester is like people say, well, how do we know this data is good? And then we say, well, you could backtest on it. So, again, when you're looking for data, you want to look for all these things. One, well thought out, comparable over different symbols, indicators. And then also the ability to view all these things historically, get a look at it, and then also be able to backtest on it. I remember when we used to bring our data down to the floor, people used to be shocked because like they go, "Oh yeah, that's what I thought." Like a lot of the really good traders knew these things intuitively, and then I would need to like figure it out from a statistical point of view. But when they see these graphs, they go, "Oh yeah, I remember that," or "That was a big trade," or it's funny to talk. It'd be funny to go to different pits and talk to the old school traders and see like we would say, "What happened here?" and they would know. So it's pretty neat thing when you could do that.
Yeah, and it's great that we have it all live now. So we recently rolled out real-time option scanning to the dashboard for everybody. So very easy to get onboarded to that. And it makes trading much more practical. I mean, ORATS is connected to 3 different brokerages. And, no matter who you use, you can use live data and do your stock scanning and option scanning and analysis in the ORATS dashboard, and then send your trades through your brokerage.
And, like just to that point, we're calculating implied volatilities live, like the market just peaked out and volatility, was shooting up like almost before that happened. So that's a pretty good indicator right there. So indicators can now be used like live, which is pretty amazing. All right, Tyler, why don't we get a trade for the folks?
Yeah, let's do it.
All right, let's go to option scanner. So Apple, again, short put spread is that looks to be like not much distribution. Oh, you could weight these rankings too. So if you want to like weight, I just had a forecast in there, but now we'll put a little distribution, a little smooth, and so then we get some of these trades that like this long call spread might be one to look at to see if there's any the other way. Meaning these are all. Here's a long put spread. So we could go long call spread, long put spread. How's that?
Sounds good.
All right, so we'll do this one again. 78 cents it was SMV value. So it looks now the smooth edge is 81, so that looks pretty fair. So we'll buy now. It just popped up long call spread. So this is moving all over the place. So let's force this and do this trade. And then so that's it's moved to the very end. So let's go back to the option scanner on call spread. Order. So that's working out. So that got filled. Let's go now back to the option scanner. And let's buy that put spread. So the highest long put spread is there. Why did that happen? Look at it. Same strike. I've never seen that. There must be, there must be something weird in the strikes file there. So let's see if we can find another long put spread. I don't think we want to do that one, Tyler.
Yeah.
Here's a long put spread. All right, yeah. So let's go with this one. 207. We'll give them a little bit. And our paper trading knows how much we're paying through the mid, and it'll give us that percentage of probability of getting filled. So we're waiting on this one right now.
I mean, that's a pretty advanced paper trader compared to a lot of the others on the market. We've worked a long time to make a really advanced paper trader and make it close to what the real market is doing.
Yeah, definitely.
So in the last few minutes here, Matt, I just want to talk about our APIs. It's you can get all this same data that we're showing through the dashboard and that we have historically through our APIs, and the endpoints are REST based and they're very easy to query. You just type in your ticker that you want data from, and it makes it really easy. So you can get historical data as well as live real-time data through our APIs.
And we have a really neat API console, and it lists all the endpoints. We have documentation. You could test it here. What I always think is cool, still can't believe that we could do this, is go back at any minute in time. Like here's one in Apple 2022-08 at 10 a.m. and you could change it to 10:01. Yeah. And then go get that data. Yeah, and it's that quick.
Yeah, I mean it really opens the door to sort of anything you can dream of analyzing, right? Any sort of movement in the option price, and we have the data for you to analyze and explore.
Yeah. So it comes through again with prices, what our values are, theoretical values, and then our forecast values are in here, and when the snapshot went up. So, and then with all the Greeks. So pretty amazing API that we've built out. And like you said, we have live now, delayed. You could go get minute by minute. You go back to 2007 and get stuff. You could do cores, which is very summarized. You could get a lot of that best ETF relationship information in there. So there's a ton of information going there in the APIs, Tyler.
Yeah, it's hard for anybody else to supply this depth of history and the breadth of symbols that we offer. Over 5,000 symbols you can query via the API, back to 2007 for near end of day data, and back to August 2020 for 1 minute granularity.
Yeah, absolutely.
Mm-hmm. All right. Well, unless you have anything else, Matt, I think that wraps it up. Good trades for today. I think we demonstrated some good capabilities and advantages of ORAT's data and tools. If you guys have any questions on our stuff, please email us at support@orats.com, or you can leave a comment below on the YouTube video. We'll see you guys again next week.
Thanks, Tyler.
Thanks, Matt.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.